Good afternoon, traders, and welcome to a special edition of the Pirate Traders live stream. I am joined today by André from Edgefull. What's up, André? How's it going?
Great, great. Very busy. Very can't complain. Very happy with how things are going. But thank you for having me, of course. As always, I always appreciate a good conversation with you and the viewers.
Awesome. Yeah. So for those of you that don't know, we had a conversation a couple months ago. We did a live stream. He created this software. He walked us through everything. If you want to go back and watch that, you can kind of get a refresher of where it all started and how he built it up and stuff like that. But today we're going to dive a little bit more into some of the specific tools that they've created, how to use them, how they are actionable to take trades, and so on and so forth. So I'm just going to hand it off to André. You can screen share if you want. It's up to you, and just kind of give us the rundown of everything.
Perfect. So let me screen share quick. Can see this okay, I'm assuming, right?
Yep, looks great.
Perfect. So for anyone who's new, I'm going to quickly just run through how everything is laid out. Then I'll go and touch on our new features, our new reports we release. We have product updates definitely every week. So at least once a week. So we always have new stuff coming out. So it's always good to kind of like poke around things, make sure that you click on all the buttons. If you are on here, click on all the buttons. If you see something new, just go check it out. Because we do release a lot very quickly. So we've recently added crypto, I think since the last time we've spoken. I'm not sure how many people watching this trade crypto, but if you are interested, we have the larger name coins, Bitcoin, Ethereum, Solana, XRP, Litecoin, etc. We're not going to have the meme coins in there, unfortunately. They're just not worth getting the data for, and also getting the data is probably impossible. So that's one thing that we added up here, but I'm just going to run through.
Hold on real quick. What exchanges are you getting your data from for the crypto? Are you using the futures or are you using the Coinbase?
So we get it from Coinbase. Okay. So there's multiple that we get it from. One of the primary ones we get it from is Coinbase.
Cool. Okay, carry on.
Yeah. So up here is your asset selector. For those of you who can see, I can just move this down a little bit. Asset selector. So if you're trading stocks or options, you want to be in the stocks area. If you're trading Forex, obviously click on Forex. Crypto, obviously crypto, and futures. This is very popular right now. Futures are kind of like blowing up. And you just have to click on this. The way you switch back and forth is just simply one click. Now we're in futures. This little area right here is your nav bar. This is your steering wheel for the entire site. This is how you literally do everything. So here we have three different types of reports. We have them around price action, volume, and indicator reports. It's these three right here. We recently added these different groupings so you can kind of narrow in your focus on like, okay, well, I know I'm a scalper. I only want to look at the reports for scalpers, which you just click on right here, and it shows you all the reports we have just for scalpers. Now that we're in the price action report type, these are all the reports that we have right here. We're looking at ES. We have every ticker that you can imagine, whether it's for stocks, any Forex pair, any equity, literally anything. And if we don't have it, you can just let us know and we can get it added in. Now we have the futures session. So this applies to Forex, crypto, and futures. So understanding, which I'll touch on in a second, what session you're looking at is very important. So this is our session selector. I'm going to touch on that in a second. Then we have 5+ years of historical data. So you can look at our reports from 1 week to 5 years. So this kind of gives you an understanding of like, okay, well, how far back, like how much data do you want to look at, etc. Personally, I recommend, and this is what I personally do. I mean, obviously everyone has their own style, but I like to go from the 1 year to the 6 month and the 3 month. The 1 year has a bigger sample size, so you get more data, of course. But the 6 and 3 month gives you what's going on more in the recent market environment. So if you see a big deviation in the 1 year and the 3 or 6 month, maybe that means that the current market environment might be shifting, because the way that these date ranges work is always a trailing period. So it's always the last 1 year or the last 6 months or the last 3 months. So we always get new data every day that goes on. We get 1 day of new data and then an old day drops off. So you always have the most recent up-to-date information for you to take your trades based on. So that's why I always recommend going to the shorter timeframes too, just so you can see the more recent market environment. If you see these bubbles here, these are just like filters or sub-reports on the report you're looking at. So here, gap fill report. We have the standard by size, by weekday, etc. We always have a visual representation of the report, always a table representation. We have these explainer graphs. If you're not sure what a gap fill is or whatever the report that we're showing you is, you just go to these explainer graphs. You can see we have gap up, gap down, gap up that gets filled, etc. We also have a explainer section right here. It's off to the right here. So if you don't know what this is doing, there's usually an example here or more explainer. Very interestingly, we added TradingView indicators. So we have our own custom TradingView indicators that you can get access to. It's part of your plan. So you just click Get Access Now and you put your TradingView username in here. Now, the way that you can find that is by just clicking this little profile button up here, and then it's just right there. My personal one is Edgefull. You can see right here. So I just put that in here, click Get Access. Now I get access to all 20 plus TradingView indicators that we have built. So when you do this, you get all of the indicators and all the new ones that come out too automatically added. You don't have to do this for every report. You just have to do it once. Just something to keep in mind. I'm going to touch on a few of the indicators later, but I just wanted to show people how to do that. Some more explainer text here. What is this measuring? How do I use it in this area? We added a table that shows you each of the instances that make up the results of the report. So here we're showing you 63% of the gaps up have filled in the last year. Now, if you scroll down, this shows you every day with the gap size, with the gap type, and whether it filled or not. And you can actually click on this, and then you can see the price chart of that day right here. So you can kind of dive deeper into what actually goes on. You can sort and filter this table. So you can sort by like ascending, descending. You can filter. So let me just type in filled here and hit enter. Let's do that. And now all the results in this table are just for the gaps that have filled. So now you can quickly look through and say, okay, I want to see every single day that just filled, and it's right here. Then finally, we have a video. I highly, highly, highly recommend that you guys watch these videos. They're extremely helpful. They're at most 5 minutes, and they will explain exactly how to use this report, what it's measuring, and how you can take trades using this data. So it's definitely worth taking the time, even if there's a report that you're like, I'm not really sure what this is doing. This will answer that question, or you can reach out to our support right here. We will always answer your questions, any questions you have, how things are calculated, etc.
Cool. So why don't you walk us through, now that you've got a bunch of people using the platform, what are some of the more popular, things that people are using?
For sure. So the gap fill report, we have this like as the standard one if you switch to price action, because it is probably the most popular without question. And let me go into what this is measuring. So let me find a good example here. And let me just quickly find a good example. I know that here's a good one. Okay. So a gap fill, for those of you who don't know, a gap is when price today opens higher or lower than the previous day's close. So what you want to look at, previous day's close, are we opening above or below? Now, it's important that I mention these sessions are really important when you're looking at Edgeful. So most people, I assume, are trading the New York session. That's what these blue boxes are measuring. So we have this TradingView indicator called the market sessions. You can see that we have the New York session starting at 9:30 to 4. And what you're doing here is you're looking, the previous close that you're looking at when you have this New York session selected is the previous New York close. So when you have this New York session selected, you're only looking at the data within the 9:30 to 4 p.m. time. So your previous day's high is the previous New York high. Your previous day's low is the previous New York low. Previous close is the previous New York close. So this is one of our most popular ones. It's the most actionable day over day. It gives you a directional bias and a price target. I'm going to touch on that in a second. So here I just marked out, I'm showing you how to set up this trade right now. So I just marked out right here, previous day's close. Let's pretend this is yesterday over here. Previous day's close in this green line. Now I'm going to mark out today's open right down here, right? So I just marked out, I'll make it red. So now this is today's open, that 9:30 open. This is yesterday's close. So now what a gap fill is when price comes up to touch the previous day's close. So when you see a gap down, you want to have a bullish bias targeting the previous day's closing price. So when you see this happen, and you can see that gaps down tend to fill 64% of the time in the last year, when price opens below the previous day's close, prices come up to touch that close. So having a long bias targeting this green line or this previous day's close has a high win rate. 64% of the time, this will happen today. Very important that I mention, this is today. This is measured today. So if it doesn't touch this line, it falls into the not filled. So the way that we measure this is the most actionable for traders or day traders and scalpers. Does that make sense?
Totally. Yeah, no, this community is gaps are our bread and butter. We're well aware of those.
Well, I'm going to show you something that's even more interesting for you and the community.
Let's do it.
We just released the customization of reports. So this little gear icon right here is something where you can change the inputs of the report to your liking. So I'm going to explain what this does. This is honestly a little bit insane. So you can see here, gaps up have filled 63% of the time, gaps down have filled 64% of the time in the last year. Now, the way that that is measured is if price comes all the way up to touch the previous day's close. If it goes 80%, that does not count as a gap fill, right? Because it has to touch previous day's close. So this is only measuring if the entire gap is filled. But what if you don't want to see the entire gap? What if you only want to see halfway? So we added something that allows you to see that. So you can see here, this is the entire gap size, roughly 18 points. I'm going to paint out here the halfway line, which is right here, this little area here, this line, and make this blue. Let's say you struggle to hold on to your winners. When something is going in your favor, you struggle to hold on to your winners, and you just say, I can't hold for this whole gap, but I can hold for half of it. Now, go to the customization, and you change this 100% to 50%. So you want to be targeting half of this gap fill. And now look what happens to the data on this side. From 63% and 64% to 80% success. So in the last year, 80% of the time, price will move half of the distance of the gap. So just targeting half of that distance, now your win rate goes from 60% to 80%. Does that make sense?
Totally. If somebody were to have the patience to only take trades on gap days and to always only take a half gap fill trade, they'd have an 80% win rate and be making way more money than everybody else if they could just be disciplined and only take those trades alone.
Exactly. And
I bet you could go back, especially with the half gap fill, you could go back and check the years, and it's probably about the same for years and years and years.
Oh yeah,
in that range.
It definitely fluctuates over time, like as the market changes, as like the volatility increases and decreases. But over time, I mean, especially for a half gap fill, you're looking at a very high win rate. Like this is something that you definitely can have a lot of success with. A lot of the traders that we have now are having a ton of success, especially, I mean, they're having a lot of success with their prop firms, especially using this data here, especially trading at half the gaps.
Mm-hmm.
So this is something that is very interesting to me because now this allows you to say, okay, like I can customize this by every 5% increment, like every increment here. So let's see what 75% shows. You can see now you're going from 60% to 70%.
Mm-hmm.
So the smaller gap that you want to target, the better likelihood, obviously, that your win rate increases. Let's look at some other things now. Let me just show you some of these other variants of the gap fill report because there is really some interesting stuff, specifically by weekday. So I'm going here to the by weekday, and now I have Monday selected, and you can see that I'm looking at gap down here. 75% of the time when Monday opens below Friday's close, it has come up to touch Friday's close, and we're looking at 100% gap fill, by the way. We're looking at the full gap, not 50% of the gap. So now if I go to 50% of I don't know what the actual results are here, but you're talking about 90% now. So if you target half the distance from Monday's open to Friday's close, when it opens below, half the distance, 90% of the time this has happened in the entire last year. So this is the
Those are good
stuff, in my
stats.
opinion. What's up?
I said, those are good stats. I mean, if you had a
Yeah.
90% win rate, you'd be a pretty happy trader, I think.
Oh yeah, you'd be thrilled. And as you go through this, you can see that each weekday behaves pretty differently. So Friday tends to fill in either direction. Some other days are more 50-50. So the data shows across the board for almost any stock, even when you go to stocks, any futures contract, any stock, any crypto, any Forex pair, every weekday does not behave the same. Just because you're trading the same ticker does not mean that you should be trading it the same every day. There's a lot of data showing that each weekday behaves differently, and you need to adapt to that weekday and the opportunities that those weekdays provide. So as I go through this, I'll show you some other things that kind of reinforce that, but it's very, very clear that you cannot trade the same exact way every single weekday and expect the same results on a Friday or a Thursday versus a Monday.
Mm-hmm.
I'll go through that a little bit more as we go through this. Do you have any more questions on this before I switch to another report?
No, we're good on gaps.
Perfect. So this is the outside days. This is probably the second most popular report that we have. It's called the outside days report. And the way that we define an outside day is if price is opening above yesterday's high. So let me just find an example here. I know that there is a good example here. Let me try to find it quickly. It's coming up. It's coming up. Perfect. Okay. So as a reminder, we're always looking at the New York session. We are not looking at the data in between it. So my previous day's high here is this blue box. I'm going to go here, mark out my previous day's high right here. I'm going to mark out my open today. You can clearly see that price opened today. I'll make this red. Clearly see that price opened above the previous day's high. This is a bullish outside day. This means price opened above yesterday's high. A bearish outside day is when price opens below yesterday's low. So what I would do in this case, mark out yesterday's low. I'll make this blue again. And if price were to open down in this area, that would be a bearish outside day. So in this case, I'm going to show you the example with a bullish outside day. And 73% of the time, when price is opened above the previous New York session, it has come down to touch that previous session's high. So when you see this setting up, when you see price opening outside of yesterday's range, you want to have a bias to reverse back into the range. There's a very high percentage that it's going to reverse back into that range. So if we open above the high, short bias targeting previous day's high, previous session's high, open below the low, long bias targeting previous session's low. Does that make sense?
Yeah, we could just consider that gaps.
Yeah, so it's the reason that it's also technically a gap up, but the difference is that the open is above. So technically it is a gap up, but it's also an outside day.
Yeah.
So,
we just measure gaps as to the previous day's high or low. So it's essentially the same thing. But yeah, no, the stats are good.
Yeah. And in this case, you can see price comes back down to touch this previous session's high, which in your case, you call it a gap. We call it an outside day. It's all just a different naming convention, but we have the report for gap fill based on previous day's close. We also have this one based on previous day's high. And you can see that price comes down to touch the previous day's high. So this is something that I really like because it's a very simple and stress-free setup. The odds here are extremely in your favor. Like anything north of 70% is, in my opinion, I love it. Other people need some more, other people need some less. But to me, this is a very, very high win rate, very high probability trade that I'm always going to take. Now, obviously, finding the entry is on you and based on your strategy and based on how you like to trade and however else. Like this does not mean short at the open, of course, because it could move up before it comes back down, which we're actually developing the report for that we'll probably have it released in a week or so, within this week maybe. But
yeah, I mean that's the bitch of it is knowing it's going to fill a gap or get into a previous day's range is one thing, but making sure that the 70% of time it works, you make more than you lose on the 30%. That's all about the entry.
Yeah,
but yeah, I mean we've got tricks for recognizing momentum and stuff like that.
Yeah. I mean, and one thing that we don't do and we're not going to do is provide signals. So no buy signals, no sell signals. We're not going to tell you enter here, stop loss here, profit target there. We're going to tell you here is a direction, short or long bias, and here is your target. Meaning that what this report is measuring is a touch of the previous session's high or low,
Yeah.
obviously. So because everyone has such a different strategy, because they have such different concepts and ways of trading, and based on like what their personal circumstances are, like can you sit at your desk all day and monitor this, or do you have to kind of like set up your trade and leave it?
Yeah.
So saying buy, sell, but like having like signals for us, we don't want to do that just because we know that everyone has a different strategy and different style.
Yeah. Well, yeah, I was thinking about the example I was thinking of. You had posted the other day on your social media about one where it was like, you know, talking about the initial balance. We all know what the initial balance is, the first hour's trade, that if the high is the first made in the initial balance, you're more likely the market's going to go lower. If the low is made first, you're more likely the market's going to go higher. And I was thinking to myself, you know, that's very, very helpful because, you know, the way I approach trading the initial balance, most of the time I'm not entering trades during that first hour. When I am, they're what we call look above or look below fail trades. So it's like the market gets above the overnight high or above the previous day's high and it fails. It pulls back in. That's like a short. Gets below the low, pulls back in. That's a long, right?
Yep.
And so I was like, just knowing that there's a high probability that whichever the high or low of that initial balance is made, you know, first ends up having continuation in the opposite direction. I was like, if I bought a look below and fail and the low was made first, that could keep me in the trade, looking for that longer target to take profits. If I'm still flat at the end of the initial balance, I could have more confidence if the low was made first, looking for longs in support. So it's like, that's the way this data I find is really helpful, is that it just supplements what you're already doing and just gives you a little more confidence or a little bit more of an edge based on how you already approach markets, you know?
Exactly. And I'll actually pull up the examples. So we have a trading view indicator for the initial balance. So the way that I'll pull it up here is I'll just go to the indicator section to invite only, and you can see Edgefull-IB-initial balance. Click on that. And now what happens is I have all of my lines, my initial balances plotted for me. So I don't have to worry about doing it. I don't have to worry about anything. It's just automatically done. So in this case, I'll just pull up this example here. So this is a pretty good one. What this report is measuring, and this is the one that you were just talking about, the buy rejection. Some of our naming conventions we might need to work on, to be honest. We just want to keep it short so people can remember it easily.
Yeah.
So the breakout report in price action, the buy rejection is the one that we're looking at. And it's very important that you look up here, the high formed first. So this one here is the high formed first of the initial balance. So here you can see the initial balance high was formed before the initial balance low was formed. So when that happens, 68% of the time, the first break of the initial balance is going to be to the low side, which means that if you know the high is forming first, and it seems like price is rejecting or coming down, obviously, to form the low here, you want to expect continuation lower rather than a break of the high before a break of the low. Because price is naturally going to be closer to this point rather than this point by the time the initial balance closes.
Yeah.
It's much more likely that price will at least break to the downside here because it's literally around that area rather than having to go all the way back up in reverse.
Yeah. And you never know during that initial balance are we going to retest the high? Are we going to retest? You don't know which is the high or low yet, but if you have something else to get you into a trade, it can kind of keep you in the trade for a longer take profit target. And if you're not in a trade by the end of the initial balance, then you know which was made first, the high or the low.
Yeah.
So I found that really interesting.
Yeah, the initial balance has gotten really popular. It was something that I personally hadn't heard of until one person had requested a report. So so everyone knows, right here in the sidebar, there is a button that says report idea. From any of our users, if you click on this and you submit a concept that we don't have, you want to see a report. There's something you look at, for example. I'm making it up right now, but If the initial reaction of CPI is positive, what is the probability that the rest of the day is also positive? What is the probability the rest of the day is green, for example? And we actually don't have a report for that. I just made it up right now. But if that's something that you like to use in your trading, then what you do is you go over here, click on report idea, and submit that idea. I'll say the more detail, the better. There's never enough detail that you could provide because it requires a lot less back and forth for me to ask questions on how you want this measured, et cetera. But if there is something that you guys look at that you don't see in here, just please request it. We also have, and we recently added the ability to request TradingView indicators. So you can actually say, well, I want to add into this TradingView indicator for the initial balance. Okay, this one is formed first, for example. Like it's just hypothetical, I'm just making it up. But that's definitely one thing that I think that a lot of people should take advantage of, because we are getting a ton of report requests right now. So I'm not sure how many more we can accept and how much longer we're going to be taking these requests, but I highly recommend that you guys do take advantage of requesting something personalized for you. It'll be automatically applicable to any asset across stocks, Forex, crypto, and futures. Any time frame, it'll automatically update. So I just wanted to say that to make sure that I got that out, because I mean, it's something that everyone should take advantage of, to be honest. It's part of Edgefull. It's part of your subscription. So I just wanted to mention that.
Yeah. And it looks like there's a mentorship too. How much of your downtime is chewed up by people asking questions?
To be honest, it used to be open every day of the week. The full schedule was open, which quickly became unsustainable.
Yeah.
So then we did Monday, Tuesday, full day was open, which also became unsustainable because, on these calls, like I want to be very sharp. I want to be very engaged and make sure that each person has a great experience talking to me, that I'm helping them, they're understanding everything. So Monday, Tuesday, all day, it became to where like when 6 o'clock comes around, I've been on call since 9:30. I'm just cooked.
Yeah.
So then I was like, I mean, the people at the end of the day are getting still a great experience, but not as, just because like my mental fuel is just like cooked, but not as engaging as the people in the morning. So we were like, okay, what's the solution here? Let's split it out into 3 days a week, half days, Monday, Wednesday, Friday. Let's just do only a couple hour block. Technically, it's still the same amount of time as if you just did 2 full days, which is what's happening now. And the next 2 weeks of mine are booked. So
yeah,
I'm not sure how this is
sustainable.
Yeah. I'm not sure how it's going to go. So
no, it always cracks me up when I see people in the trading space who do that, who offer like free mentorship time. Cause I did it a while back and it was just like, it became, like you say, for me, it just became exhausting because you're having the same conversations with people over and over again. And everyone's got the same problem and the same question. And eventually I'm just like, I'm going to just teach a course and just put this into a course and do it once. Cause this is crazy.
So what we actually added was we just created a Discord. It's completely for free. And what we might end up doing is, instead of having the mentorship calls, a weekly webinar in the Discord. So instead of it's one-on-one, it'll be like one-to-many. So it'll be
that's a good idea
to join. And then everyone can ask questions. And what's nice about that is that people will be able to ask questions, and then other people will be able to say like, oh, I didn't think of that. Now I can like kind of take from other people's questions and kind of like learn from that, which will be nice.
Yeah, that would be more ideal for sure.
Yeah, for sure. In terms of like time, absolutely. Yeah.
All right, real quick. I got a couple questions here. Can we just pile through them real quick?
Yeah, of course. Absolutely.
Okay, so can the software count how many rotations in a certain time period? Let's say you want to see how many 4-point rotations within a 30-minute period. Is there a way that they can individually program like a time frame and then like a range or anything like that?
So rotation, you mean price moving up to a certain point and then fully retracing down?
Yeah. A big part of how we look at trading is recognizing, is the market trending? Is it going from one location to another? Or is it just rotating? Is it just going up and down in a range? So they're just saying like, can you look within, from 1 o'clock to 2 o'clock, how often it bounces or whatever,
Yeah, we definitely can, especially because it's very objective. One thing that I'll point out is this report called intraday range window. And let's say what this does here, it allows you to pick a certain time frame, and then you can see the average range or the average high to the low within that time frame. So it's not exactly what you're saying, but in the meantime, if someone wants to use something like this to understand like how much meat is there on the bone during this time that I'm using or this time that I'm looking at, here is how much meat there is on the bone, typically from the high to the low within this first hour of market open. So what I'm going to do is I'm actually going to put a request in for that report. I'll obviously talk to you in more detail about it when we get off of this, but we can definitely build that out. The way that I would use this one in the meantime is to say, am I expecting a larger or smaller move? So the point move for ES in that first hour in the last year is roughly 20 points. But let's say I want to do 12 to 1, like typically lunchtime, a lot less, almost half. So now understanding how much meat there is on the bone when you're in a trade helps you understand, where am I setting my profit targets, and should I leave runners or should I not? So for example, earlier in the morning, you can leave runners because if you're capturing a 10-point move, you can maybe squeeze out like another 5 or so points, capturing the majority of the average range. But if the window or the average range or the amount of meat on the bone is less, maybe you want to just kind of take your profits as they come, because it's more likely to have more consolidation, more choppy price action, or less continuation during these times.
Yeah, and it's slower too, so it's more painful psychologically.
For sure. And the one that we actually just added a report on this was a request, intraday volume and range. So you can see here, this white line is the average range, and then the blue bars are the average volume. You can see that there's a very significant dip in volume and range as we get towards this noon area. And what that means is most likely to have choppy price action, probably not a lot of continuation. In order to get strong momentum, you need more volume. You need people to continuously come in and push price in a certain direction. Mm-hmm. So if volume starts to die out, it's a lot less likely for there to be continuation in a certain direction. And maybe that results in more wicks, more fake outs when there is lower volume like you see here.
Yeah, it is so funny how much volume comes in that last 10 minutes of the day. Look at that.
Yeah, usually you see these crazy, crazy moves. I mean, it's been happening in the last couple of weeks too. These crazy moves in like the last 10, 15 minutes. Mm-hmm. Personally, I don't like to trade those usually, unless you have some sort of edge, unless you have some sort of system that you've developed around it. Like I don't. Mm-hmm. I just find that most of the trades that I've taken in that time are losses, just because I don't know, I'm either trying to like catch a top or catch a bottom or just like hope for continuation. I'm chasing a move. I feel personally it's more of kind of frantic than anything else. So
we call it the murder bot because it just murders you. It's like, if you're in a trade already and you have a target, give it a try, but don't enter one because you'll get chewed up.
For sure. Yeah.
All right. Another question here. I think I have the answer for this, but he says, how do I find instances that create the percentage, or how many instances create the percentage? That's just the stuff on the top where you're programming 1 year or 6 months worth of data.
Yeah.
Yeah.
So here, this is important. So here, this is how far back you want this report to calculate. This is what this section is up here. So right now we're looking at the trailing 1 year. We're looking 12 months back, 12 trading months back. So, the calendar, it's right here. Always the date that you're looking at is right here. So July 17th, 2023 to July 12th, 2024, 1 year back. And then you can see the actual instances always in the table form of whatever you're looking at. So here, there's been 144 gaps up. There's been 91 times where the gap has filled, 53 times where the gap has not filled. There have been 111 gaps down, 71 times the gap down is filled, and 40 times it has not filled. Now, the one thing that I'm going to say is we get a lot of comments about, well, this isn't a big enough sample size. You need to go back 20 years. The market does not move the way that it does now, the way it did in 2004. It is actually going to hurt you to use data from all the way back then because you're getting so much irrelevant data that it's diluting the current market environment away from the results.
Yeah, I
So
couldn't
can
agree
you,
more.
it's
Like the tighter the range, the more reliable the data. I would say 6 months to a year is probably your sweet spot.
correct. And that's what I focus on. I tell people this all the time. And the amount of comments that we've gotten of like, well, it's not enough data, it's not enough data. Well, there's only 250 trading days in a whole year. So how much data do you want?
Yeah.
You're getting literally the maximum possible data that you can within a certain market environment. Like there's only so much that we can do. We can't make up more trading days to give you more data. If you want to go further back, you're going to dilute the value of the results.
Yeah. People have
That's
such a hard time with that. Like in general, in trading, one of the toughest things
yeah,
I find people that I work with, the issue they run into is they cannot accept that the market is changing all the time, that the way its behaviors are changing all the time. And you have to be willing to accept
all the time.
that and change with it. It's like, it's a
Yeah,
difficult thing for people.
it really is. And the one thing that everyone talks about, oh, like statistically significant. They say it all the time. And they're like, well, you need to go 20 years back. 144 gaps up is not enough data. I'm like, why would that not be enough data? This is an entire year's worth. Like, there's only so much that we can do. And the one thing that's really nice about this is that when you pick a certain time frame, you pick 6 months, you pick 1 year, you're always getting the most recent data. So what Edgeful allows you to do is capture always the most up-to-date information without having to do it on your own, without having to just, like, for example, I know that there's a lot of packages that you can buy. So there's these companies where you can buy a data set, but it's old now. Because even 1 month later, there is an entire new month of data that is not in that data set. What we do differently is that it's always ongoing. It's always the most recent up-to-date information. And I'll address this one other comment that we get, which is, why can't I just take screenshots? Like what's preventing me from taking a screenshot and canceling my subscription? And my answer to that is, if you want to subscribe again in a month or 6 weeks, you're just going to be canceling and resubscribing over and over again because the data changes from every month, every 2 months, every 3 months.
Mm-hmm.
So if you want to have the most recent up-to-date information, you're going to have to resubscribe,
Yeah.
which is
Particularly if you trade stocks, because
I mean,
things that
of
are happening
course.
with companies are constantly changing.
Yeah. And it's something that I found that the people who take trading less seriously are not willing to pay for tools like a journal, like a community, like Edgeful. The people who are not willing to commit their money and their energy and their time to a tool are the ones that are not taking it seriously. Because if you think about it, like the amount of information and the amount of value that you're getting from this, like the amount of money that you can make from this tool, pays for it. Like it pays for itself 100 times over. But people are like, I don't want to put money into it. It should be for free, or like whatever it is.
Mm-hmm.
And the same thing with your community, like the amount of effort you put into your videos, the amount of effort you put into like to build the community and to create the content and to provide value. And the people who are not willing to like reciprocate that or to like provide value back to you for all the
Mm-hmm.
energy you put into them, is those are just not the right people. They want to get stuff for free. They want to get handouts. And like, unfortunately, whether they do this or not, like trading doesn't give you handouts.
Yeah.
This
Yeah.
business, there's no accidental success in trading.
And that's why it has such turnover. Those
Yeah.
people, they're always there, but they come and go. It's
Yeah.
like those people, they come and go and they come and go, and there's always new ones. Yeah, it's true.
Yeah. 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 And I mean, and that's fine because that applies to any industry. It applies to any business. I mean, there are people that want handouts and there are people that are willing to put in the energy, and the people who are willing to put in the energy are the ones that will succeed. I mean, that's the way that it is. It's the way it's always been. It's always the way that it will be. That's the way it is.
Yeah, for sure. All right. So we got the basics of it. Are there any cool things that we should know about? Any like cool things you've figured out that we haven't talked about yet?
There's, do you guys swing trade at all?
Yeah, we got swing traders in the room for sure.
Okay, there's two. I don't swing trade, but in terms of like even setting up your levels for the week, there's two things that I really like. And if you want me to go on SPY, I can go on SPY too, but in this, it's very, very similar from ES to SPY. Also, I'll touch on one other thing just before I go to that, is the market session breakout report. So what this one measures is, let me just remove that. Let me hide this. I'm going to put on my London session here. So for you guys that are trading the both sessions, or sorry. For the people who are trading futures, what this report measures is how often does New York session break one side of the London session, both sides of the London session, or neither side of the London session. So in the last year, 74% of the time, New York will break one side of the London session and not both. So what you can see in this example, I turned on by going to my settings here. I went to the settings. I just toggled on my London session. Now you can see the green box is the London session. Clearly, one side broken, one side broken, one side broken, and not the other side. So targeting a full reversal to the other side, you're playing a losing game. It is very likely for New York to break one side of the London session and not both. And almost equally as likely, is it will break one side because only 13% of the time in the entire last year will it not break either side. So paying attention to your London highs and lows is something that will help you have a kind of a bias in terms of a certain direction.
Yeah,
One thing
and
I'll
target. If you're in a trade in that direction, where would you want to take profits?
Exactly. And then one thing I'll mention is you have to wait for 11 a.m. Eastern time for the London session to close to start to, I mean, you don't have to wait to enter the trade, but these stats are after the London session closes. It's one thing I'll mention. Any questions on that before I switch to the swing trader kind of higher level setup one?
No, that makes sense.
Perfect. So the high and low by weekday report is, let me just try to find an example here. Okay. This is a good example. Okay. This high and low by weekday report tells you what days of the week tend to make the high of the week in this blue area, and what days of the week tend to make the low of the week in this black area here. I'm going to focus on the highest points of the week for now, for the sake of this conversation. You can see that in the last year, the high of the week, 40% of the time has been on a Friday, 21% of the time has been on a Thursday. So you can expect price to rise as the week progresses. Now, the other thing that stands out to me is that only 10% of the time in the last year, Wednesday has been the high of the week. The least often, Wednesday has been the high. So here I have my week, right? Monday, Tuesday, Wednesday, Thursday, Friday. The moment that Wednesday reclaims Monday and Tuesday's high, now Wednesday is now the high of the week. There is a very, very high probability that Thursday or Friday will dethrone Wednesday as the high of the week. Whether you're a scalper, whether you're a day trader, whether you're a swing trader, targeting Wednesday's high to be broken by either Thursday or Friday is a very high probability trade. So as soon as you see Wednesday breaking the high, these Monday and Tuesday's high, you can, if you're a swing trader, you can get long here, swinging into the end of the week. If you're a scalper, you can wait for Thursday or Friday for either of these days to make a new high of the week. So let me show you, I'm just zooming in here. This is Wednesday, this is Thursday, this is Friday. Even here, Friday is really this king of the high of the week, opened below Thursday's high, and then went to go smash Thursday's high. So targeting these areas and having an understanding of like, okay, when you're making your pre-market plans, understanding where are my levels, what weekday is the high of the week so far. This is something that I highly recommend because the data is so strong towards a certain direction. 61% of the time in the last year, the high of the week has been on either Thursday or Friday. I'll take those odds all day, expecting later in the week to make the move up. I'll take that all day. So to apply this as a scalper, day trader, or swing trader, you can use this. And also, the other thing that I'll mention here is that 35% of the time, the most amount of time, Mondays have been the low of the week. So that's something that I think is really good in terms of setting up your week, setting up your pre-market plans, setting up your whole your weekly picture and just understanding where your levels are, this is something that I really like.
Yeah, I wonder how like things like FOMC meetings affect that. There must be outsized examples where, I mean, that must be the 12% or 10% where the Wednesday makes the
Yeah,
higher low.
I'm sure. You know what? I'm sure you're right on that. I'm going to make a note of that, and we can actually look into that because let's say we just excluded FOMC days from this, I would imagine the results
Would be
these
very different.
Wednesdays, would be very different.
Yeah.
Good point. Good point on that. The one other one that I'll touch on is the previous week's range. Now, if you're a stock trader, this one, I had a mentorship call with someone last week, and he was saying that he was using this report to set up swing trades. He was options trader selling vertical spreads on different stocks, on like a bunch of like Target and a few other things. Now, what this shows is that it's referring always to the previous week's range, and it says 65% of the time price will touch the previous week's high, 33% of the time it will touch the previous week's low. That's interesting. That's cool. This is what really stands out to me. Less than 10% of the time in the last year has price touched the high and the low of last week. Very, very unlikely for price, once it touches one, for it to retrace and touch the other one. So if you like to sell options, once price touches one, you can sell call spreads or put spreads on the other side of that week's range with a very, very high win rate. And you could swing that. You can sell the weekly expiration. But just so you know, I would not recommend going further out than 1 week because this data only shows from 1 week to the next.
Mm-hmm.
And equally as unlikely is that it doesn't touch either side. So you can, with very, very high confidence, expect price to touch one side of the previous week. So let me just go here. I mean, it already happened today, which seems to be the case. So right here, I'm going to just for futures traders, I'm going to my New York high because I'm looking at the New York session. I'm going to mark out my New York high. I'm going to mark out my New York low, which again, as I just mentioned with the other report, Mondays make the low, Fridays make the high. Swing trading. I mean, obviously it would have been miserable to sit through this if you are a swing trader, but a long buy swing trader.
And if you used a trailing stop, it would have been fine.
Yeah, absolutely. Would have been perfectly fine. And you can see I'm just dividing my week here. So now today broke previous week's high. There is less than a 10% chance that price is going to do this all the way back down here. So selling vertical put spreads down in this area has an extremely high win rate. It is extremely unlikely that price will get all the way back down here this week. It might do it next week, but that doesn't matter. We're talking about this week. So this is something that I really like to look at. The other thing is the outside close variant of this report. You click on that. So now this checks for every time in the last year that price has broken that previous week's high, 76% of the time it has closed above that high. So now, not only is the odds of it getting down here very low, but the odds of it closing above this previous week's high is very high. Does that make sense?
Yeah.
Yeah. So setting up your week, whether you scalp, whether you day trade, whether you swing trade, these are the reports that you can use on your Monday. Let's say you're doing your Sunday setup for your week. Looking at this, where are my weekly highs? Where are my weekly lows? Did we break one of these levels? Because if we did, I don't want to be targeting this area. If we did, I want to be targeting a close of this week to be above this area, etc. These are the types of things that you can use to just add in more confidence into your trading to give you a bigger edge. So these are the ones that have been very popular. We also added a most popular section. So this is a very boiled down list of our most popular reports, which you guys can obviously go through and look at. Highly recommend watching the videos again. But yeah, I've touched on a lot of the more popular ones. Just kind of the secret things that I don't really like to talk about publicly is the previous week's range and kind of the how to set up your week in terms of trading.
Cool. Yeah, somebody's reminding me in the chat here. I have been, since we first started talking, I've been meaning to write you an email and tell you a specific thing to research. So I'm going to, this person's reminding me, I'm going to send him the way to measure the stats for cessation of the trend. We have a way that we look at when the market has momentum and it's heading a certain direction. It gets cessation of the trend. It usually goes sideways. We'd love to know how often does it actually go sideways? How often does it start trending again? But I'll write it out for you to have the specifics for it.
If you want to make a video, and this applies to anyone watching, if you do like a screen recording or whatever, you want to show me an example, the more detail, the better, because it makes the conversation, it actually makes the production of it a lot faster because it requires less back and forth. The more detail, the better. This applies to you, obviously, but everyone else, because we'll be able to get it out faster just with less questions, of course.
Sweet. But yeah, no, I got to do that. That's an important one.
Yeah. That'd be great. It's always nice to build stuff for you, for like communities, because now it applies to a bunch of people. So I'm excited to do it. Yeah.
No, we should definitely get that done while you're still building new stuff. We got to get in under the deadline.
Yeah, exactly. That's an important thing. I mean, we're so dynamic. This is something that one of the biggest things for us is making sure that we get the feedback from our users. It is absolutely paramount. It is the most important thing. To me, to the team, is what works, what doesn't. Let's focus on what works. Let's remove what doesn't. And if anyone has feedback, if anyone has comments, if anyone has these things like, why do you have it like this or whatever else, please let us know. Because to be honest, this product is being built, this app is being built through the mouths and through the opinions of our users. It's not, I mean, it's a lot, we're guiding a lot of it, but the feedback, the refinement, the development is coming from the users. So please don't be shy with the feedback. It's really important to us, and it will make it more valuable to you too. So if there's something you don't understand, don't be shy to be like, well, I don't get it. It's fine. You're probably not alone. And for us to fix it for you, it'll fix it for a lot of other people too.
Yeah. No, I said it when you first started this thing, that like the potential to build this out slowly over time, it could end up being a just incredible tool, especially for people that are new and just trying to make sense of things. You know what I mean? So I think you're doing a great job. Keep it up, keep going.
Thank you. We're going full throttle. So, I mean, I appreciate it. I appreciate
don't die, but keep going.
Yeah. I'm working on it. I'm focused more on keep going, but it's totally fine.
Great. Well, thanks so much, man. I think that's probably a good point to wrap it up.
Perfect.
We'll do this again in a few months because you'll have added more new cool stuff to talk about.
Yep. Of course. I would love to. Always love to speak with you. Love to, it's always nice to talk to data oriented people. They always give good feedback, give good ideas. So, and it becomes more valuable to you. So it's a pleasure. Thank you for having me. Of course, I'm looking forward to coming back again.
All right, man. Awesome. I'm going to end this and then just show them some numbers on the charts, but appreciate you. Good. See you next time.
Of course. Have a good one.
Bye-bye.
Bye.
All righty, guys. I hope you enjoyed that. I do really mean what I just said. They are doing cool things there. Every day they're adding new stuff to Edgefull, and I'm excited about the kind of stuff it could have down the line. All right. Well, what are we looking at here in the market? Looking at the ES right at this very moment. So we were able to poke up and get above Friday's high, make that new all-time high. That is bullish to see. This is bullish because this is a breakout of balance. Okay. If this is a little mini 3-day balance that the market did here, the first step for continuation is to break out. The next step is to come back and back test that breakout. Okay. So we made a new all-time high. That is bullish on a daily time frame. We have higher highs and higher lows, value overlapping to higher. That is bullish on a daily time frame. But intraday, we have a set of single prints that need backfilling back to 56.98, left behind from the C period. And we have the balance area high, which again is not an exact level, but we'll just call it this general area right here around 95. that is in need of a back test for continuation higher. So my guess is, and I've been looking at the chart for 2 seconds, but my guess is that probably we're going to go sideways for a little bit, backfill these single prints, and look for support in here. If that support holds, it is very bullish carrying forward for the days ahead. But as far as intraday today, I would say it's probably more neutral. The thing that would get me bullish thinking this market is going to continue higher is if it gets back above the previous high, Friday's high, and starts to create support there. So you could see the last time it broke above, it got momentum, but then when it came back, it did not have support. That's why we got cessation. So if they can come back up and turn it into support, I could say we could make another poke to the upside intraday today. But as of now, I assume the higher probability is sideways inside this range. Let's take a look at the ticks. Yeah, ticks are bullish. So it could break higher later on in the day. One thing we've been talking about a lot lately is that it used to be, if you started trending and then you got cessation, you almost always went sideways for the rest of the day. But, recently, let's say over the last year, it's become much more common to get one dip later on in the day and then immediately start trending again. So seeing that there's so much momentum in the ticks and the market internals, you got the breadth and the advancers versus decliners trending higher, and you got the ticks for the most part more above the zero line than below. That means this is a day that is set up to make a second move later on in the day, but I wouldn't long it unless I saw that new buying above Friday's high. Right? So there's certainly a chance to go long here for continuation higher, but I wouldn't even touch it until I saw that new support. And if it gets another look above and fail, the target is backfilling those single prints or getting back to the point of control, which is just a regular old rotational trade for a regular old rotational market. I'm going to call the E period low weak because it reversed right at the halfback. But again, that's a sign of momentum too. So if they can get above here and turn this into support, I would ignore that weak reference and look for new buying. Let's pop over and take a look at the Q and see what's happening there. Okay. Yeah, so Q a little less bullish than the ES. Why? Well, the ES, first off, made new all-time highs today. The NQ did not. And also, the way both markets were behaving this morning, they felt like a pin, right? We talk about the difference between regular balance, where there's just uncertainty. Some people think it's going to go up, some think it's going to go down, and so you're getting bets both directions. And, a pin, which is an artificial holding of the market in a particular place, if the markets are pinned for balance, that's going to be your pin on the Q. Okay? So they tried to move away from it, they got pulled back. They tried to move away from it, they got pulled back. Look what just happened again intraday today. They tried to move away from it, they got pulled back. Right? So you don't have single prints, which are a sign of momentum. You're still inside the middle of this, large pullback day. So I would say the Q is less likely to break higher later in the day, more likely to go sideways inside the range. But the ES, it could do either. That is so funny. This morning I was more neutral on the ES, bullish on the Q. Now I'm more bullish on the ES, neutral on the Q. What can you do? I also saw while he was talking on that top banner, I saw that Coinbase did a 10% move today. Whap, 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 whap. You guys know I'm a long-term holder of the Coinbase, so that's nice to see. I assume Bitcoin made a pop. Oh, yeah. Yes, and it's breaking out of a trend. That's what it is. Bitcoin loves a trend line. Bitcoin loves a trend line break. So I'd say you're pushing into some horizontal resistance here on the corn. Previous support becoming resistance. So either it runs out of steam here and starts to pull back down, or a move higher, a move above 64,000 will likely get some follow through up towards 66. Crypto's on the move. We only got 58 people hanging out here. We got 34 likes. If you wouldn't mind smashing the thumbs up button, I sure would appreciate it. I'm still trying to talk the YouTube algorithm into liking me again. So the more participation from you guys, the more the algorithm likes me. SRQ Trader says, how can we get a video over to André? Well, he's probably going to get mad at me for telling you this, but his email address is hello@edgefull.com. So if you just email him there, he'll get that video. Don't you be sending him no spam, though. Arjun says, some edge in gold futures, please. Yeah, sorry, I missed that while he was still talking. But I'll take a look at gold and see if there's anything happening with my eyeballs. Oh, dude, gold has been on a freaking rip lately. Look at that. Okay, so gold is kissing those all-time highs once again. Again, we talked about this very large balance area, multi-month long balance. So it's too early to call a breakout of balance. We may get another one of these. We may get another look above that fails and comes right back down again. But this could also be the beginning of the next leg higher. So we'll just go old-fashioned balance to excess here. Balance, break, excess. At least the range of the balance. Balance, break, excess. So if gold can break this and get continuation, it can get a pretty decent sized move. I mean, you're talking 25.60. Ain't no thing, Jelly Bean. Over the months ahead. I would not be an intraday trader of gold, for what it's worth. Or Bitcoin. All right, the market is rotational. We did not get that bounce back above Friday's high. So now the next order of business, it's happening as we speak, is to backfill these single prints in the C period. Maybe that's all the market needs to turn around and start to get some momentum. But for now, it looks like rotation, both markets, ES and NQ. So I'd be looking for support in the Q around 2620 for a move back up to 2680, 87. And on the ES, potential bounce at 5698. If not, 5691 for a move back to the PO sizzle at 5706. Steven says, do you read anything into the difference between the TPOC and the VPOC? Yeah, let me give you my feelings on TPOC and VPOC, because I am singularly opinionated in this. You won't hear many other people describe it this way. So intraday, so during the session, I think the TPOC is more important than the VPOC. Okay? Why do I say more important? It is more important in terms of recognizing changes. So if it moves somewhere, it's more important. And if you're looking for a target, when the market is rotational, you're looking for a place to take profits on a reversion to the mean strategy, the time point of control is more important than volume. Why? Because there is an order with which things change in the market. First, price advertises, then time regulates, then volume measures. So what does that mean? It means first the market moves to a new level. If it can spend time there, right? If it can stay at that level for a while, then it has a chance to bring in volume at that level. But it can't bring in volume if it can't spend time there. If the market just pushes up to a level and instantly reverses away from it, it won't be there long enough to bring in volume at that level. So where the market brought in volume, an hour ago is not as important as where it's spending time right now. Because if it spends a lot of time here, it'll bring in the volume here. And then that won't be the volume point of control anymore. So what you end up getting is first the market makes a new TPOC, and then over time, that becomes a new VPOC. So if you have them in very different locations, so like let's say we'll take today as an example. Coincidentally, they're right next to each other, right? The VPOC is right here and the TPOC is right here. But let's pretend this was the VPOC down here near the opening price. And let's say the market closed right now. So you got your time POC up here and your volume POC down here. That will likely mean the market needs to dip down one more time to get to that volume POC in the overnight or tomorrow. But since they're right next to each other, that means this is the fair price to do business, which means it doesn't have to go any lower. And if it does go lower, it will likely come back up again. Because this is where the market has spent the most time today, and this is where the market brought in the most volume today. Okay, so that's intraday. Now, when you're going from one day to the next day, time POC doesn't matter as much. Okay, so I would very rarely use a time POC as like a support or resistance level or a target unless it was very prominent. That's a whole different ball game. So if it's a very prominent time point of control, then it's definitely support or resistance or a target. But generally speaking, if you're going from one day to the next, the volume point of control is much more important. Here's an example of that. So you had a very prominent time point of control here, 9 letters across. Volume point of control is a few points higher. The next day, the market came down. What did it tag? And then reverse to a tick. The volume point of control. So from one day to the next, the volume is more important than time. Any other questions for the pirate? Thank you guys for those likes. I appreciate you. Anything at all? Going once? Going twice? Time for lunch for me then. Thank you guys so very much. I will see you tomorrow morning in the private stream. Have a good one, everyone.